Hello and welcome to Wyckoff Training Academy. This is buy setup video, buy trades like trade setup one video, wherein I'll be discussing about how to initiate trades based on 188 version, 185 version, and 155 version. So today we are going to talk about trade setup one. This would be a 10 to 15 minutes video, short and precise, so that you should be in a position to understand and you can review it again and again to get the insight. So to begin with, first we'll dive into version 188 trade setup. Simple. As soon as the price goes above, we'll draw a resistance or top in both the ways. And as soon as the price breaks out of this thing, we would look for a test for opening a buy trade, or either ways, as soon as it touches, breaks down and touches this level or continue downwards as being a top, this would come continue downwards. And as soon as we see a sell candle, that has to be, like for example, we use version 155 for assessing this one. This is a sell candle, this is a demand candle. So if we see a breakout and we want to see a demand candle, if there is a continuation to a downward side and price is touching back to this particular top, then we would initiate a sell trade on the first and nearest mark. Remember our words, first and nearest sell candle, and there would be the stop loss. So we'll just try to assess, do we got any situation? No, there was no breakout or test of this thing. We are talking about, always remember, here we are talking about swing highs and swing lows. So we consider only swing points, not the, like this is the top price haven't reached this particular level. If it would have reached this one and we got a sell candle like this one, a red candle with blue triangle, then we would have initiated sell order over here with the stop above. And in this way, like for short trades, targets would be the corresponding lows, swing lows, and for buy, targets would be corresponding swing highs. It is simple and straightforward approach. So now we will see, do we got any trade? Like for example, we will look for two examples. We'll start with Euro USD. Have you got any trade in this particular market? Like for example, if I extend my line over here, so we got two trading opportunities. One this one. This was stopped out. Again, we got an entry because this I'm considering a swing. Price has come up, made a swing high, then price is returning back to this particular level. And if we see closely, this is a spring happening, taking place over here. So this has a greater probability to reach up till this level. So this was my target one. Or either if for targets, you can sit with the predefined targets, or you can use 155 version for trailing a stop loss. If you're stopped out, you're out of the market. And it is always good for sit with the predefined profit or expecting a profit at this particular point. So this was an example for a buy opportunity. And as price has risen from this particular point, this is your first entry and second entry. Now we'll look into another opportunity. Did we got any other opportunity? Like for example, this was the swing high, or either you can consider this was a swing high, for example, because this was a top formation. Remember, for making top, we look for the highest swing level, which happens to be this one. If I draw a line from this particular point, let me set the chart properly. So if I draw a line from this particular point, my bad. If I draw a line from this particular point, I can see I got this first trading opportunity. This is my stop. The stop is not been triggered. We got a second entry at this particular point. This was my first target. This was my second target, and both the targets are achieved. So this is how you have to use version 155. So 188 for stop loss. The red candle with blue triangle should after this this was the top, price came back and then reached upwards. As soon as I got my selling candle over here or over here, I would have initiated my sell trade over here with the stop above and looking for target. So this is my trade setup one based on 188 version. So now I'll talk about 155 version. 155 version, we have support and resistance plotted. So whenever a support is formed, what we want, price to go upwards and then come back and test it, and then we should get a demand candle. For we'll buy on the first demand candle, and here the stop loss is big. It is up to you whether you want to you it is up to you to decide which whether you want to offer a trade or not. Because I normally prefer a low momentum candle or small candle, green candle to initiate the trade. So here also, and I always consider first pullback to initiate my trade. Here the target would be this one. First target would be this one. Please remember, I am considering all the swing points. If I'm entering here also, this is my first target, this is my second target, because these are the corresponding highs from this particular point. So now, many a times people ask me which level to consider. The level wherein price is reacting, you should consider that level. For example, this was the resistance, but price went through it, pierced through it, and then we haven't got any touch at this particular point or test of this particular point. We got a test at this particular point, and we got a setup here. So simple and straightforward. All my setups are very straight and simple. So here is a buy setup, and again we got a pullback, but we haven't got any entry candle over here. Here also we haven't got any entry candle, but here we got an entry candle. So as I mentioned earlier, I consider only first pullback. So it is up to you whether to decide whether you want to go for this trade or not. But I would rather not go for this one. I would love to go for this one because this is the first pullback which I am getting. Sometimes it happens first pullback results in smaller trades, and second or third pullback would yield much more profit. So, but as per my observation, I consider only first pullback. If you want to consider, you can consider this one. But the number of pullbacks, if the pullbacks increases, then it reduces, as per my experience, it reduces probability. So what I like to say, if this thing is happening with this one and price is going upward, wait for a new level to form so that we can initiate a price continuation trade. Now we will look into a selling opportunity if we got anyone like here. It was like the reason for taking the only first pullback is like this was the resistance. Price came back and touched this level. I think there was a touch. 1 second. Let me zoom in so that we should be in a position to understand it correctly. Okay. So now this was price was hugging these levels. It was revolving in and out. Then price came back, touched it, not touched it. Here it touched, but we haven't got any entry candle. What is our entry candle for selling? We want a red candle with blue triangle. So we haven't got it. Then we have a breakout. Then price is coming back. Again, it is going up and down, up and down. So here, if you are considering this to be a buy opportunity, then I don't like if you are considering this one, this is a stop loss. So again, that is the reason I want price to touch this level and then bounce back. So it is a one candle violation, price is coming downwards and we are going nowhere. So if that is the case, after this particular candle or this candle, you should be out of the trade if you're entered into this particular market. Because if, as per my experience, like one or two or three candles are more than enough for us to take the market up. Even if that is the case, you are stopped out over here. Then what happened? We are coming back. We are prices coming down. Then we are going upwards. And this is not testing. This is somewhere you can see prices looping through this level. And after that, we got the resolve at this particular point. But again, we haven't got any trade setup over here. What's per my trade setup? If this is the kind of testing I'm talking about, and price should not go above this level, but rather price should touch it and it should sink in. But we haven't got any entry candle like this taking like appearing at this particular point. If this candle would have appeared over here, I would have considered it to be sell. But Again, one thing I always tell you, we only trade first pullback or in either ways. So on either ways, this was the first pullback. It failed to come down. Either ways, this was the first pullback towards the upper side. We were stopped out. So after that, anything which is appearing after that will not add any value to our trading, because then it would be a price level wherein an access line would form. That means price is trailing, moving here and there in this particular term, in this particular price. I see, have you got any clear cut, crystal clear trade? Like for example, here we are coming down, again we are going upwards. So this is a place to initiate your trade. But again, there is a benefit of, like, there is something price congestion, not swing point. So this is a swing. If you compare, if you say this is a swing, if you consider this to be a swing, I'll not consider this to be a swing, because price is revolving in same price area. I want to see price going downwards and then coming upwards. So here you can say we got a swing, and then uh, candle rejection of this particular point, and then I can short over here and stop loss would be here. So this is a selling, because I look for selling, always look for first pullback and a red candle with blue triangle, and for buying, always look for a green triangle with green candle. And let's see what happens in FCPO, FCPO 2025. See every candle and working in 5 minutes of, like, if it is working in Euro USD or other thing. Okay, based on 155 version, lesser duration. If you come down to 5 minutes, so like here, we got a trade setup at this particular point. This was a support, it was broken, then price went upwards. We had got this violation, this much of price reject, price trading above this level, and then coming down. And again, I, what I want, or what I like to see, if this is a support and price is coming down, I don't want price to go up and then come down. What I want is that if price is above and then it is coming down, I want this test to take place at this particular point and a sell candle to appear here, not here. So this, even though this is a greater degree of rejection compared to this one, but I have made certain rules which I follow. You can plan your trades accordingly based on your thing. Like for example, here also there were 3, 4 candles closing, revolving around here, and then we got a resolve in the higher side. So you have to decide whether you want to make it a wick, or like a smaller rejection, or candles to form above or below the level. But I don't do that way. I always try to see touch. Like for example, here I think there is some degree of touch or not. I'm not clear, because this is not clear to me, this area. If this is a touch, for example, and if I got a demand candle here, I would initially buy it. But again, I would not consider this one to be the case. So again, we like to see any picture perfect trade. Like for example, this is the picture perfect trade. We got a swing upwards, rejection, but again, it is up to you to decide whether you want to go for a trade, because this is a stop loss. I don't know in Malaysian like ringgits how much the stop loss would be. So again, here we have come up, come down, but here it is a very huge stop loss. You should do the momentum study and what is the rate. So like this is on a 5 minute, like on a 5 minute. If I see over here, I got a pullback, then price rejection, price going downward, then upwards, and then eating away all the stop loss, and then coming back, and then we got to this level, and here price is revolving around this particular level. So this is not a swing point of situation, but price is not able to get above this particular level. Only few candles give or take. So this kind of price behavior is normally seen at the major support or resistance level. So this will not offer many trades as far as FCPO is concerned, but if you follow this top and bottom 150, this particular thing. Mm, 1 second. We had a support from this particular point. Let me draw a straight line. We got first test, second test. If you want, you can initiate a trade over here. This is a spring of this particular level, and this is another level forming here. So there are two levels which are corresponding to this one is the level. This one is, I guess, this one is pertaining to this one. Then we have a breakdown test. Now, the main thing to look out for is like if this is the test, price has broken down. This is a very huge candle to initiate a trade. So you have to decide for yourself which one you want to take. As soon as the price goes down, this is a trade setup over here. Here also we haven't got any trade. We haven't got any bottom at this particular point. This is what a support. This was another trade. Like this is the confluence. This is a high probability trading situation when both the things one gives you a bottom and as well as it gives you a support, draws you a support. This is a high probability level, and price has high probability to touch this level or at least come back near to it. Then we have this level, which happens to be this particular price action. If I draw a straight line, 1 second, let me draw the straight line. Yes, you got a trade selling trade opportunity at this particular point. Breakdown test, you can sell it here, stop loss here, and trail your stop loss accordingly. So I'll not cover 150 version today. Like till like for what I say, what I can say, like I'll only keep it till 150 version or 188 version, and tomorrow I'll upload another trade setup um, based on 185 version. One is trending, one is counter trend. So please watch this video and please review it again for targets and stop loss. And wait for the next video, which is going to be 155 version, 188 version. And thanks a lot for watching this video and enjoy trading.